Welcome back. A settlement of almost $25 billion paid by Canada's tobacco companies is inching closer to reality, but does it do enough? Rob Cunningham is a lawyer and senior policy analyst at the Canadian Cancer Society. Thanks for being with us, Rob.
Hi, Amanda. Thank you.
It's been a long time coming, of course. So let's just start with where the money goes and who will get it. Is this enough based on the harm that's been done over time?
Well, as you mentioned, almost $25 billion going from the tobacco companies to the provinces. There's also $4.1 billion to a Quebec class action that was really a driving force in the timing that forced the negotiations. $2.5 billion to victims outside the Quebec class action on a pan-Canadian basis, and $1 billion to a new foundation to improve outcomes from tobacco-related disease. So, it's very significant in terms of the whole history of this. There has been a court hearing in terms of a final step to consider approving this. And from our perspective, though, there could be much more in terms of measures to reduce smoking and improve public health.
And of course, one of the aspects that's so interesting is, Philip Morris just reported its numbers, and its volumes of sales are super high because the tobacco companies have shifted to new products, including, of course, vaping products and these new sort of pouches that they're all marketing. Are we doing enough to mitigate against future damage so that we don't have a repeat of what we saw with smoking tobacco?
So I think there's a lot more that can be done with respect to this newer category of product. In this proposed settlement, this plan, electronic cigarettes, nicotine pouches, heated tobacco products are completely excluded in the future from what tobacco companies, the profits from those categories, what has to be paid to provincial and territorial governments. So it's going to be essential that provinces and the federal government have much stronger regulation, especially to protect youth. And the federal government needs to finalize that regulation to restrict flavors in e-cigarettes. It's been waiting for more than 3 years for that final approval.
And so, and as we know, those products really are their future. Why would they be excluded, Rob? Why wouldn't the provinces set up kind of a conduit that says, look, you're going to sell them, they do damage, we cover health costs, let's have some compensation built in?
Well, that was part of the negotiations. When the provinces originally filed their lawsuits against tobacco companies, there was no electronic cigarettes at all. These newer category products were not being sold. So I guess that's part of the rationale as to what they weren't suing to recover damages from that. Nonetheless, we have this huge problem. We're approaching 1 million Canadians who vape, who have never smoked. That's not what's supposed to be happening. And so there is a comprehensive need for governments to take action to deal with this, very much emerging long-term and short-term public health issue in Canada.
Not a ton of time here, but in short, are these new products safer? Are they a lower cancer risk than previous tobacco products?
Health Canada has stated that electronic cigarettes are less harmful than conventional cigarettes. Nonetheless, they are harmful. And a big fundamental concern is that there are so many younger people who are never smokers, who are getting addicted to this. And we need to address that very actively.
Rob, so good to have you. Appreciate your time.
Thanks very much, Amanda. My pleasure.
Rob Cunningham is a senior policy analyst at the Canadian Cancer Society. Time for the takeaway and the cost of following the rules. Businesses in Canada are struggling under the weight of mounting regulations. A new report from Statistics Canada suggests those rules and regulations shaved almost 2% off the growth of business in this country over a 15-year period. That doesn't include the impact excess regulatory burden has on households or government. It comes at a time when Canada is very focused on how to compete in the face of erratic behavior from our largest trading partner. The regulatory burden between provinces has attracted a lot of attention, along with promises to fix it at long last. But the sheer number of regulations is also eye-opening. The total number of regulations governing the private sector grew by 37% between 2006 and 2021, and makes the total more than 300,000. It's not hard to imagine that not all of those rules are necessary or even doing what they were intended. But it explains why businesses, especially ones which should be engines of growth and job creation, have a hard time finding extra capital to invest. Even returning the number of rules back to where they were a decade and a half ago would create a more innovative and dynamic business sector. Given the attention on problems like this right now, perhaps the time has come to try to reduce some of the red tape. None of that's to say business shouldn't be regulated. Of course, they should, for the protection of consumers and to enforce agreed upon standards. But it's also not hard to imagine that some of the regulations were written on top of old ones, that if we could rip it all up and start over, it would probably look a lot simpler and still be effective. It's in some ways what's happening in the U.S. right now, although the approach seems to be less precision and more sledgehammer. Still, the appeal is obvious. Like the tax code, our regulations have become complicated and layered. My takeaway? Let's have a federal regulatory czar and make simplification the primary objective. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.